Hey, what's up guys? Aaron here. This video is with Laura over at Crypto Tax Girl. In this video, we basically answer all of the most popular questions that have come in since our first interview we did about a month ago. I personally am using Laura and her team to do my crypto taxes this year, and so far the experience has been really awesome. They are so freaking supportive, and they basically take your hand and show you exactly what I need to send them in order for them to figure out everything regarding my taxes. So this video obviously is about Celsius and the Celsius tax saga. So basically we cover everything and we go into a lot more detail that we didn't go into in the first video. So I hope you really enjoy this video, whether you already did your taxes or you're doing your taxes with somebody else or online. I really think you will get a lot of benefit from this video. Hey Laura, how's it going?
Good. Hi, good to see you. I'm doing good, thanks.
So wow, so we had a really popular, I would say, first video on taxes that we did maybe like a month or so ago for Celsius. I'm curious, how's it going with you regarding the whole tax season, crypto, and also what happened from that video in terms of just what was the response from that?
Yeah, it was really good on our end. I mean, you might as well just change my name to like Celsius Tax Girl now, because that's literally all we're doing at this point. I mean, we still have our clients from last year, but after doing your last video, within like 3 hours of the video being posted, we were completely filled up until the deadline, all of our spots. And then since then, we just keep getting more booked out until like into the summer now. So we are fully in the weeds of Celsius. We have taken on, I think, about 250 Celsius clients so far. We have a lot on the waiting list. And even though we are like booked out until April 15th, that doesn't necessarily mean that's the end of the tax season. You can still extend your tax return until October. So if you're hearing this and you're just starting the video and you're like, well, there's no point because she's already booked out, don't worry, we still can help you and we can help you file an extension. You can go until October. And if you're taking Ponzi or capital, as we learned in the last video, there's different timing on both. So there's still opportunities out there, but you might have to wait a couple months.
Got it. But they can still work with you. And in this video, we'll go over a lot of the FAQs. We kind of compiled a whole bunch of questions that have come in. So just to clarify, is there anything else you want to share before we get into these questions about people that know they want to work with you or just want to jump on this immediately, or any final things before we kind of dive in?
Yeah. So last time we did the video, there was a pretty strong response immediately after in our email. I think I was getting like 100 emails an hour for the first week. And so it took us a while to get through that initial inflow. I don't know if it'll be the same after this video or not, but to make it easier on your guys' end, if you already know that you want to work with us, we've set up a easier pipeline for you, just more of like an express option. So if you go to cryptotaxgirl.com/Celsius, which is where we've been posting all of our Celsius updates, there'll be a link there and you can pay the retainer and get signed up as a client to secure your spot on the waiting list right away. And after you pay that, we'll reach out to you. We'll help you file an extension if needed and get you the engagement letter, all the information you need, but it'll just secure your spot if you already know you want to work with us and you don't want to wait for us to get back to your emails. But of course, if you have any questions, like we definitely want to answer them, and no pressure at all at the beginning. So if you aren't sure and you want to chat with us more or like find out if Ponzi or capital is better for you before you get signed up as a client, there's two options then at that point. So one, you can set up a consultation or we'll answer your questions and help you figure out if Ponzi or capital is better. Or you can just send us an email. So if you just have a few questions or you feel like your situation's unique, feel free to send me an email. We'd be happy to answer those and then help you get set up as a client or schedule a call or whatever you want to do after that. So few options. We'll put them below in the description. Again, they're like listed on my website. So you can just go there and then pick whatever one's best for you.
All right, let's dive in. How do I know if I should do the Ponzi or do the capital loss?
Okay, I get this question pretty much every day. So now through doing a lot of reports, I've kind of come up with some better thresholds that you can use to determine whether you should do Ponzi or capital. So if your cost basis is at or below the petition price, which were the prices they determined your claim amount at, so like Bitcoin was like 19,000 something. If your cost basis was below any of those petition prices, you're never going to take Ponzi. Just know that you have a low cost basis, you're always going to go the capital route. If your cost basis is at or above petition, you could potentially do the Ponzi or the capital, but it just depends on how big your claim is and how much higher your cost basis is relative to petition. So basically, the higher your cost basis, the bigger the loss. And The bigger your claim, the bigger your loss as well. So that's what you should look at when you're trying to decide whether you're going to do capital or Ponzi. And there's other factors to consider as well, like, like we talked about before, like your marital status, your income, whether you itemize, stuff like that. But just if you're looking at Ponzi versus capital, apples versus oranges, those are kind of the things you should look at.
Next one, what is the audit risk when taking the Ponzi loss?
Okay, so this one actually I have an update for you guys on from the last video. So like I said, we've only done Ponzi really like a few times since I've started TurboTax Girl like 6 years ago, because there hasn't been a ton of losses that could qualify for this Safe Harbor Ponzi loss. But since then, I've talked to some other CPA firms who, like back in the 2008 crash, when there was a lot of companies that, especially we had the Enron, everything that was this whole Safe Harbor Ponzi loss law came into place for. They had filed a lot of these Safe Harbor Ponzi loss tax returns back in 2008. And they told me that the audit risk was a lot higher than I maybe had anticipated. It was 60% of tax returns. So if you file a Safe Harbor Ponzi loss, just know that the audit risk is high. They did share some tips with me too about how you can reduce your chance of getting audited and like the extra documentation you can provide, maybe like attaching a statement. But just know that if you are going to do this, you have to just keep in mind that there might be an audit and kind of factor that into the price as well. Because if you get audited, that might take you a few hours. It could take 2 hours, 3 hours, 4 hours, 10 hours in audit support time, just depending on how complicated your situation is. So any of my clients who are wanting to do the Ponzi loss, I've talked to them about it and, explained all of these risks. And some people are like, well, I just have a W-2 and a 1099 and my crypto was bought on Coinbase, transferred to Celsius. Like, it's really all straightforward. I'm fine. If there's an audit, I have nothing to hide. It's fine. But then I have other clients who are like, I have 3 businesses and 5 rental properties and all this other stuff. And I've been in crypto for 10 years. Like, I'm not trying to open the floodgates on all that. Even if they know they've been reporting it correctly, it's like the amount of time that would take to just submit everything would be such a hassle. So you need to factor in your own personal complexity and also the amount of savings. So if you're going to save like, I don't know, maybe only a few $1,000s from doing Ponzi, I would definitely do capital. But I have clients that are going to save hundreds of thousands of dollars. And for them, when you factor in even the cost of a potential audit, it's still like worth it. So just make sure that you look at both options with a little more scrutiny, I would say.
Can I work with Laura, you, if I already have my own CPA?
Yes, I have had this question a lot as well. So if you work with us to do the crypto calculations, whether we're doing your full crypto tax report or just the Celsius calculations, it's not required to work with us for your tax return. So if you already have a CPA, but your CPA is like, I know nothing about crypto, I know nothing about the Celsius stuff, which is most likely the case, we'd be happy to just do the crypto portion, provide you with all the documents, and then your own CPA can file the tax return. But I would say if you are doing Ponzi, just make sure your CPA is comfortable filing that, because that tax form is quite complex. We will fill it out for you so they can put it in your return. But if you have any hesitation about working with them, we'd be happy to file your return, even just the year for the Ponzi if you want to keep working with your CPA after. But yeah, usually it is okay.
Can I use TurboTax if I work with you?
Okay, so yeah, a lot of people, even if they don't use their own CPA, they just do it themselves in TurboTax, and maybe they've been doing it that way for years. So if you go the capital option, you can do it in TurboTax. Again, we'll give you all the information you need to put it into TurboTax. But if you do Ponzi, you can't do it on TurboTax. Again, this is like a complicated tax form, high audit risk. TurboTax does not support this. And so if you're going to go that option, then you'll have to have us file your tax return or another CPA.
If I've already filed my taxes, can I still take the Celsius loss?
Okay, yeah. So as we started our last video back at the beginning of February, so not too many people had filed their taxes yet, but now as we're getting closer to the deadline, I have been getting this question more often. And the answer is yes, especially if you're taking the capital option, because it doesn't impact you until 2024. And so you don't have to worry about really anything on your 2023 tax return unless you have all this other crypto activity. Of course, we'd be happy to calculate that for you, but it's not Celsius specific. But if you take Ponzi, you do have to take it in the 2023 tax year. So ideally, you will have already taken it before you file your return. If you've already filed your return and you obviously didn't take the Ponzi loss, but you still want to take it, you can, but it has to be filed by October 15th. That's like when the extension deadline is. And there's a special election we can make on your return saying like, I already filed my return timely. but now I'm amending it just for the Celsius loss. But after October 15th, we can't do Ponzi anymore. So like November, December next year, if you're like, oh, I'm not sure if I'm going to do capital or Ponzi, but probably capital, I'll just worry about it next year. If we decide that Ponzi was best for you, it's too late. So you have to have it done by October 15th. So even if you're, like I was saying at the beginning, we're booked out till June, but if you're like, well, I'm not going to worry about this till next year, if you're potentially considering Ponzi, definitely get on our list now.
Next one, how many hours does it usually take? I assume they're talking about to work with you, to use you as an
Yeah,
as
I think to work
CPA.
with us.
Yeah.
So it totally depends on how complex your situation is. So like I said in the last video, the big, most important part of the whole calculation is your cost basis. So we need to spend time with you figuring out what your cost basis is for everything that went into Celsius. And that includes like grabbing all of your data from your various wallets and exchanges, reconciling them, making sure there's no holes in the data, cleaning it up, pulling your tax reports for all your previous years, and then doing the Celsius calculation. So the Celsius calculation usually takes about 2 hours-ish, and then all the other cost basis stuff just depends on how complex it is. So if you've just bought on Coinbase and transferred to Celsius, that's like only an hour or so on top of that 2 hours. But if you have been in crypto since 2017 and you've used every wallet and exchange under the sun, that's more like 10 hours or so. So most clients on average are like 6 hours, and most of our clients have some sort of complexity to us. That's why they work with us. So 6 hours plus 2 for the Celsius maybe is what you're looking at if you're like a standard like kind of degen client. I've noticed a lot more of the Celsius people are less complicated than our normal clients. It's more like they've just been accumulating, holding crypto, not a lot of sales, transferred to Celsius to try and, increase their portfolio, and then obviously had the loss. But if you're less complicated, it'll take less time. So there's a bit of a range. That's why we do hourly.
So you said you're hourly. How much do you charge?
So we charge $500 an hour, and that's just standard across the board. If you mention that you come from Aaron, you'll get $100 off, but the actual crypto calculation and the Celsius calculation is $500 an hour.
And just for you guys watching, I did mention this in my last video, but I have and I am currently using Laura and her team to do my taxes, and incredibly hands-on, really thorough, really like white glove. I think that's the phrase.
Totally.
Like, you're not just like, all right, have fun, go at it, good luck, may the force be with you. It's very much like, it's very hands-on. So I just wanted to add
I'm
that.
glad you've had a good experience. Yeah, our like tagline is like making crypto taxes easy. So glad that you felt it's been an easy, smooth process there.
Yeah, there's somebody helping me do it and basically doing it for me. They're doing all the work for me. Like I'm not doing anything.
Exactly. Yeah, you shouldn't have to be doing the work.
All right, next question. I want to work with Laura, but I don't have a huge budget. Does she offer any discounts?
So the one thing I will say, yeah, we don't really offer discounts besides a special $100 discount for you. But I have had people that want to work with us, but that don't have a huge budget. So the one thing I will say is, again, the most of our time is spent calculating your cost basis. So if you have already calculated your own cost basis in your own crypto tax software, and you're not going to have us review your calculations, you're not going to have us jump in and enter all the data for you in your own crypto tax software, you just want the actual Celsius calculation done to determine if you should do Ponzi or capital, and then what your loss would be on Ponzi and what your loss would be on capital, and then have the tax forms completed for either option. We can usually do that in 2 hours because, like I said, the Celsius calculation is about 2 hours. So if you have a smaller budget and you're willing to do that work on your end and have some sort of slight risk that it's not looked over by a CPA, like you're just okay calculating that on your own, we can do that for about $1,000 for the full thing. Or even if you do that and you want to have us review it, maybe that would be an extra 30 minutes to an hour, depending how complex it is. But that's some way that you can save on budget if you're willing to take on some of the calculation on your own.
I am looking for advice on the best software to use to calculate the average or my average cost basis.
Okay, good follow-up question to the last one. Yeah. So if you are going to do it, I highly recommend that you use coin tracking. There's a lot of crypto tax softwares out there. A lot of them are not good. A lot of them look good, but they're not actually good. Coin tracking might not look the best when you first look at it, but I'm telling you, it is the best as far as, especially like the manual options that it provides when we're doing the Celsius calculations, it's the best one out there. There's also Coinly that we do work with a lot, but specifically for the Celsius stuff, we kind of have to do a lot of manual stuff in your account, and coin tracking is the best. If you go to, again, cryptotaxgirl.com/coin tracking, it'll give you, I think, like 10 or 20% off coin tracking if you end up needing one of the paid accounts. If it's simple, you might actually be able to get away with a free account as well, but I would do that. And then also too, I guess if you are looking to calculate on your own, I guess I'll put a little plug in. I have a course teaching you our entire process from beginning to end. So you can go and watch it and it'll teach you how to grab your data, put it into coin tracking, reconcile it, do the whole process as if we were doing it, but you just do it on your own. Again, you can go to my website and get a link to that course, and maybe, Aaron can throw it in the description, but there are different options. We don't require like a set package. We have to do every single thing from the beginning to the tax return. We recognize that everyone kind of has a different budget and a different situation. So there's a few different options there.
What do I do if I forgot to download my Celsius history, the transaction history, before the app shut down?
You know what? You had 1,000 chances. Aaron told you 1,000 times. So did I, but that's okay. I have had a few people that did not do this, and I'm sure there's going to be more in the future as we get further away from the date that the app shut down. I actually did have a few clients this week that I asked them to reach out to Celsius and see if they could get their data, and they ended up getting it. So I guess it is still possible. If you didn't get it before, you can email them and they'll send it to you, hopefully. But if this is you, do that step as soon as possible. Don't wait like a year to do that step, because I don't know if they'll be as willing a year from now.
All right, next question. For the forced liquidation calculations in a capital loss scenario, is it a 100% forced liquidation? Or if you had Bitcoin and ETH and some of that was returned to you, could those be considered a non-taxable transfer or recovery?
They're basically saying that when I talked about the capital loss scenario, I was saying that you had all these coins on Celsius and then you're getting back Bitcoin, ETH, and stock. And basically you take your claim, whatever you were holding in Celsius, and it's a forced liquidation for the Bitcoin, the ETH, and the stock. So they're saying if you were holding Bitcoin and ETH and now you're getting back some Bitcoin and ETH, is that still taxable, or can that just be like a withdrawal, a return? So the answer is it can be non-taxable. Any portion of Bitcoin or ETH that you were holding and then you also got back, that will just keep its original cost basis and holding period, and then everything else will be liquidated. So if you were holding, like, let's just say to be simple, only like 2 Bitcoin, and then you got back, I don't remember how much you would get back if you had 2 Bitcoin. Let's say like 0.7 Bitcoin you end up getting back. If that's the case, that 0.7 would keep its original cost basis and holding period. A little bit of the Bitcoin would be liquidated for the ETH that you got back. A little bit of the Bitcoin would be liquidated for the shares that you got back. And then the rest of the Bitcoin would wait until it's ready to be written off. But yes, in short, if you get back Bitcoin or ETH and it's less than what you were holding on Celsius, then you can get that portion in your original cost basis and holding period, and it won't be taxable.
Is this guide, I guess everything we're talking about, for all countries around the world, or is it just for the United States?
Just for the US. I mean, the actual crypto tax calculation for like calculating cost basis can apply anywhere, but I have no idea how other countries are treating this loss. I doubt there's some sort of safe harbor Ponzi loss in every country. Maybe they have like a capital option. Maybe there's another sort of like theft or Ponzi loss in your country. But unfortunately, if that is you, we could help you calculate your cost basis, but the actual Celsius calculation we wouldn't be able to help with. So talk to someone locally if that's you.
Can I use this Ponzi scheme loss deduction in 2024 if I don't opt in 2023?
No, you have to take it in the year of discovery, which is the year of indictment of whoever was in charge of the Ponzi. So in July 2023 is when the indictment was for like fraud, and everything else is like mishandling of funds and all these other charges they got. That was in July 2023, so you have to take the loss in 2023.
Next one, do you calculate your loss based on the petition price or another way?
Not based on the petition price. The petition price is what they use to calculate your claim amount. So that's how they determine how much Bitcoin, ETH, and stock you're getting back. But it actually doesn't have anything to do with the tax calculation. So the calculation is based on the effective price, which is the one in the court document, and then minus your cost basis. So That's how you determine whether it was a gain or loss. That's how you determine which portion. There is also more complexity behind that calculation. It's not necessarily just effective minus cost basis, but those two numbers are the most important when it comes to the actual calculation. But petition price is used also to determine the ratio and how much you're getting back. So it's probably too complicated to talk about here, but don't write off the loss based on the petition price if you're trying to do this on your own.
How do we know the dollar amount that we got back? We got the claim in coins, which is great, but the prices fluctuate. So what is the value that we assign to determine how much of a loss to take?
I think what they're asking is like similar to the last question. Like, how do we know the Bitcoin and the ETH we got back? How do we know what their value is? I think that's what they're asking. So the value of the Bitcoin and the ETH, it was determined on the January 16th, 2024 is when the effective date price was dated to. And so you'll have those coins come in as of January 16th, and then the cost basis will be the amount of coins you got times the effective price. That's how you determine the value of those if you later go and sell that Bitcoin or ETH.
Please explain how the 2025 capital gains or losses were calculated.
So this is basically everything that you have left at the end of the 2024 amount. So whatever you got back this year was only a portion. Like you got a portion in Bitcoin, a portion in ETH, and a portion in stock. And it's about like 70-ish% that you got back. But there's still the illiquid assets. There's still future potential distributions, and there's a potential amount that you might just never get back. And so 2025 was based on the cost basis of whatever portion of your claim is left over after we liquidate a portion of it for the 2024 distributions. So I can't really like walk you through exact formula of how to do it because again, it's like pretty complicated, but that's what it is. It's just the cost basis of whatever you have left after we liquidate a portion of it and withdraw maybe a portion of it as well if you had Bitcoin and ETH. And also, sorry, I'll just add one more thing. It's not necessarily in 2025 as well. I think I talked about that last time, but this could go on as long as the bankruptcy goes on. So if this goes on for 2 more years, you might not be able to write off for 2 more years. If it's next year, if it's 10 years from now, this really could unfortunately go on for a while. So you might not be able to take that final loss amount from the amount that wasn't returned until this is all wrapped up.
All right. The next question having to do with stablecoins, which a lot of people had on Celsius. Can you claim a loss on stablecoins?
Okay. So yeah, after the video, I didn't realize also how many people had stablecoins on Celsius, but I had a lot of questions about this and I have a lot of clients with stablecoins. So one thing to note is just if you have stablecoins, you're not going to do Ponzi. It's not going to be a good option for you. So you will do the capital. And if you have capital, it's really not going to impact you very much because you're going to have a forced liquidation at your cost basis, but your cost basis is 1, then it's your cost basis is 1 at the effective, it's always 1. And so yes, it's a forced liquidation, but there's not going to be any gain or loss really, like it'll be the same. So you'll have a taxable event, but without a gain or loss in 2024. And so really just the remaining portion of your claim, it's like 20-ish% unless you add the illiquid assets, maybe that's like 26%. So let's say you had 100,000, like 26,000 of that will just be sitting there waiting to write off in 25 or whenever it's determined. You're not going to get anything back, but you're not going to really have any big gains or losses from Celsius for a while, unfortunately.
Let's say I bought 1 Bitcoin in 2015 for $200, lucky person, and
they're feeling good today.
Oh, they're feeling really good. And 1 Bitcoin on November 2021 for $60,000.
Okay.
This person sent 1 Bitcoin to Celsius in December 2021, so a month after they purchased that 1 Bitcoin for $60K. What would be their cost basis at that point?
Okay, so assuming they still are holding both of these Bitcoin and they haven't like sold one of them and already put it on their taxes. So let's say they sold 1 Bitcoin in 2022. Had they used the one from 2015, then you can't use that anymore. But assuming you're just still holding both, I mean, the Celsius one's kind of not, you're not really holding it. But as long as you haven't marked either of these as sold in the past, you actually can use either one. And this has been a tax strategy we've used with a lot of clients because like most people, they've bought in Bitcoin, ETH, all their other coins at multiple prices, and they've sent it into Celsius. So as long as it was purchased before July 14th, 2022, so like the day that Celsius shut down, we can use any of that cost basis. So when our clients are working with us and we're trying to figure out which option is better for them, we can also kind of look at, you could use Ponzi if we take your higher cost basis stuff. You could use capital if we use your lower cost basis stuff. Like we also look at their personal situation and say, if we're looking at 2023, 2024, and 2025 and potentially beyond, like what's your income going to be like between these 3 years? If it's about the same, then that's okay. But like some people are like, I sold a business, I have a lot of income one year, or I was laid off for 1 year. I didn't really have a lot of income that year, or I had a lot of capital losses, or, had a lot of gains. So we can look at like different options and what they had kind of going on in their situation to help them determine whether we should use the high cost basis stuff or if we should use the low cost basis stuff. And that would also for the different parts of the calculation. So for the 2024 forced liquidation, do we want to use high or low? For the amount that you're eventually going to write off, do we want to use high or low? So this has been kind of like a fun way to work with clients as well and figure out how we can help them on like a personal level, not just like, we have like our standard calculations that we use and all these spreadsheets, but also there's a lot of flexibility within those.
Why can't I take the entire loss in 2023 or 2024?
Okay, so if you're doing Ponzi, you can't take the entire loss in 2023. Just because the way it's written, you can only take 75% of the loss in the first year, the year of discovery. So that one, you can't take the full loss yet. And then for capital, you can't do anything in 2023 because you got stuff in 2024. So that's when the taxable event happened. And also you can't take the entire loss in 2024. Again, like we already said, because you might get future distributions later. A little quick summary.
How do you calculate the cost basis across different platforms used to originally purchase crypto before transferring that crypto to Celsius?
So you'll have to just do the crypto reconciliation. So whether you do that on your own or with us, it's like a big process of gathering all of your wallets and exchanges. We've already kind of talked about this, but the way to calculate your cost basis is to use a crypto tax software to reconcile all of your transactions. So of course, we'd love to help you.
The next question, since we were told that Celsius was not going to provide us with tax forms, how will the IRS know what my owed taxes will be on my distributions? Will they use a default tax strategy? And if so, what is that?
So I don't know, because we haven't had any like IRS audits on this. And it's honestly probably won't happen until 2024, even if they were going to do anything, because you didn't receive distributions till 24. So I don't know, but we do know that the Celsius bankruptcy documents have literally everyone's name in it. So they know that you have crypto at the very least. And so they will not have specific tax forms calculating this, but they can see, just like I built a calculator where I put in your claim amount, I can figure out what your distribution amount was. They could do the exact same thing and figure out what your distribution is. And if you don't report anything, they could just say, well, you have to report that as income. That's what I've seen them do a lot in the past on different audits, is if they know that crypto came into your account and they don't know where it came from, even if it was just like transferring from your own exchange or wallet, if it's not like reported on your tax return, they could question it, audit it, and just say like, okay, you received $50,000 worth of Bitcoin and ETH, like you need to include that as $50,000 on your tax return. But really, it's like this actually might be a loss due to like a forced liquidation. This could be totally different than just $50,000 of income. So I don't know exactly how they're going to do it, but they have all the info they need to like do whatever.
Yeah, we've all been doxxed. All right. Next question is, what is included in a 20-minute consultation? Is there anything I should do to prepare for that?
Yeah. Usually what we do is we'll ask you like, are you in earn, lend, custody? What kind of claim did you have? What were you holding? And again, like if you could even have the bankruptcy document like screenshotted and sent to us before the consultation, that'll make it easier so we don't have to like go through and find your name, because some people are like, I'm not sure, I just know it was like $100,000 worth. But depending on which coin you had, that makes a difference in the calculation. And then also if you have even like a rough estimate of what your cost basis is, that'll also help, because in that time we like to help you determine whether Ponzi or capital is better for you, and then kind of help you determine the timing, what an anticipated gain or loss would be, especially right now, because we're putting people on extension, helping them figure out if they should make any sort of like estimated tax payment before the deadline or not. And then also gather other information about you, like, are you married? Are you single? What's your income? Like, to help you determine further which one would be better for you and if there's any other tax planning opportunities you might have. So of course, working with us will help you get all the exact numbers, but even if you know, like, okay, did you buy Bitcoin more like $200 or more like 20,000 or more like 60,000? Like those are all going to make a big difference. So if you could get that information, even just a rough estimate, that'll make the time more efficient.
Can I take the loss if I haven't reported crypto on my taxes in the past?
Okay, this is really common. I feel like a lot of people get nervous to get started on their crypto taxes, and especially the Celsius stuff, because they're like, I never have reported my crypto taxes. How can I suddenly report a loss? So don't worry, you're not the only one in this boat. Like almost all of my clients, I'm cleaning up multiple years on. It's like, okay, you know, this year crypto's spiked, and they're like, oh, I'm starting to make money. I really should clean this up. Or I finally have money to pay for a crypto tax accountant. Like I'm ready to finally do it. So if this is you, like, again, you're not alone. Don't worry. I have a ton of clients in this boat. And by default, when we're calculating your current year crypto gains and losses and income and all the Celsius calculation, by default, we're going to calculate all the previous years as well. So I just was reviewing someone right before this call, and they've been in since 2015. So by default, I pulled a 2015, 16, 17, like every year report and gave it to him so that he can use that to compare it against what he's already reported if he has been doing it on his own, or if they haven't reported anything, we can totally help you clean up. So you don't need to go back and report everything from 2015. There's like a 3-year statute of limitation. So the IRS can't go back more than 3 years unless the amount you underreported was more than 25% of your income. So that's not a ton of people. For most people, it's only 2020, 2021, 2022, and 2023 that we're looking at, because it's 3 years from the date you filed your return. And actually, after April 15th, 2020 is going to be off the table as well. So it'll be 2021 and everything going forward. So if you need help cleaning up, filing amendments and everything is totally part of our process. We can help you with that, or at least give you the information to decide if you want to file an amendment or not. If you're going to do Ponzi, I highly recommend cleaning up your previous stuff because, again, it's like heavily audited. So you want to make sure everything's like pretty tight and correct there. But don't worry if you haven't done it in the past. We can still do it. You can still take the loss now. We can get everything amended. It's not that big of a deal.
Does she, meaning you, accept crypto as payment?
We do. Yep, we do. And if you're actually in that group where you want to do the express route and get on our list right away, just email me quickly and say what's your crypto addresses. I'll send them to you, and you can pay that $500 retainer in crypto as well. And all of our services can be paid in crypto. If you want to even set up a consultation in crypto, let me know and I can send you a link for that.
If the Safe Harbor Ponzi loss 75% is more than the taxes owed in 2023, would we get a refund in addition to not paying any taxes for that year?
Yeah, your loss is just an itemized deduction, the Safe Harbor Ponzi loss. It's an itemized deduction that you use against your other income. So if you have, like, let's say you had W-2 income, let's say you had $200,000 of W-2 income, and then you take a $100,000 Ponzi loss. You've probably had the taxes withheld on your W-2, and now all of a sudden you're only going to have to pay like half that. So yeah, you'll get a refund. Let's say as the opposite, you had a $100,000 W-2, but then you had $200,000 of Ponzi loss. So you had a huge amount of like your net worth in Celsius. If that's the case, you can fully offset all of your income, and then it'll create an NOL that will roll forward to next year that you can also use to offset your income next year. So that might increase your risk of audit if you're like completely offsetting your income, getting a full refund, but it is possible. And again, like, I'm confident in this position. We can definitely help you in the case of an audit. We'll provide all the documentation you need, but you could completely wipe out your tax bill this year potentially.
You said NOL. For someone that doesn't know what that is, what does that stand for?
A net operating loss. So just a loss on basically like you have no income.
For the capital gains losses on coins held on Celsius, this would be, I guess, the cost basis calculations, what this person is writing. What date should I use for the quote sale date?
Okay, so if you're doing capital, what is like the forced liquidation date? So I mentioned it earlier, but just to clarify, it's 1/16/24.
Got it. January 16th, 2024. I'll throw up the prices right now of what those are on the screen for you guys. If going the capital gains loss route, what happens to previously reported Celsius interest revenue? It was mentioned that the Ponzi loss route would prevent you from amending or changing previous tax years. But does that mean we can't do anything to recoup the taxes paid on interest previously if we do a capital loss? That's a good question.
Yeah. Does that make sense? So basically they're saying, like, if I've reported my interest, especially if they got like a 1099 MISC and they reported their interest. So Ponzi says you cannot go back and amend that anymore. What can we do for capital? Can we amend? How do we get some sort of recoup on the tax paid? So you will get it recouped because, again, your whole claim amount was dependent upon what you were holding in Celsius. And If you had been accruing interest, like let's say you started with 1 Bitcoin, but then you got up to like 1.1 Bitcoin from all the interest you got, that 1.1 Bitcoin becomes your claim amount. And so the amount of Bitcoin and ETH that you get back now is going to have that extra 0.1 on there anyways. And so the loss that you'll eventually take will also have that 0.1 factored into it. So again, it's not going to happen immediately, but like you will eventually write off at least 0.1 of your Bitcoin at some point, unless you end up getting 100% back, which I don't know if we will. But so that 0.1 will eventually be written off, and you'll be able to write off the full cost basis, which was the full amount you included as income. So I mean, it would be nice to amend and get it back immediately, but because you got the 1099 MISC, you have to report it then, because the IRS says that you need to report income when you have dominion and control over it, so that you could sell, trade, spend, or otherwise dispose of it. And as of the points when you received that income, you technically did have that ability. I mean, it sucks now because you obviously don't anymore, but at the time, like had you received this January, February, March, anything in 2022 earlier, you could have withdrawn it. You just chose not to. So later you lost that dominion and control, but at the time you received it, you did have it. So that's why you had to have included it as income. It sucks, but just how that whole tax law is written.
Could you provide a more detailed example of how to handle getting back different coins from what we originally held in Celsius? Say we held Solana and we're getting back Bitcoin and ETH. How would that work?
Okay, yeah. I mean, we talked earlier if you were holding like Bitcoin and ETH, how you would get a portion of those would just keep the cost basis and holding period. But if you weren't holding any Bitcoin and ETH, let's say you're only holding Solana, you will have a forced liquidation of all of your Solana for some Bitcoin, some ETH, and some stock. And then you'll have a portion of your Solana that just is staying and that you can eventually write off in the future. So it's based on how much Solana you were originally holding. And then you add the 5% bonus if you didn't opt out of the class claim settlement. And then you times it by the percentages of the Bitcoin distribution, the percentage of the ETH, the percentage of the stock, and then the remainder you just hold. So again, it's all like based on different ratios and calculations and cost basis and effective price and petition price. But those are like that's basically what's happening. You're liquidating a part of your SOL for Bitcoin, part for ETH, a part for stock, and then you're holding some.
Do I still have a taxable event even if I don't sell the Bitcoin and ETH I got from my distributions?
Yeah, because like we were saying, the taxable event is the liquidation of what you were holding for the Bitcoin, ETH, and stock. So that's the first taxable event. And then now you're holding your Bitcoin and ETH. So if you sold it like the same day, technically it's a taxable event, like selling it to US dollars, but there'd be no gain or loss because you bought it. Like the effective date was one day. And then, well, you might actually have a little bit of a gain because 1/16 until like mid-February, when people got their distributions, it had gone up a bit. So you might have a little gain or loss there. If you didn't sell it and you're still holding it, there's no second taxable event, but there will be in the future when you eventually sell, trade, or spend it.
Please discuss custody accounts that had over $100,000 and only got back the 72.5% of their in-kind crypto. Is there any tax losses that can be claimed for the missing unreturned 27.5% that they're not getting back?
Yes. Okay, so this one's different than the other two options. So this one, if you were in custody, you had over 100,000, like you agreed to take an in-kind distribution of only 72.5% and like forgo the additional 27.5%. So it's not like the earn ones or the lend where it's like, okay, you might still get back a portion in the future, maybe 1 year from the distribution amount or whatever we end up having. And so that 27.5%, like you're never going to get that again. You've already agreed to just forego that. So that can happen in the year that you ended up getting back your custody amount. So a lot of people got it back in 23, some people got it back in 24, but whatever year you received back a portion of your custody, and then we can write off the rest as a capital loss equal to whatever your cost basis was on 27.5% of your claims.
If we are taking the capital loss route, if I would like to use the capital loss method, can I wait to figure out my losses and tax basis until the 2024 tax year?
Yes, if you are doing the capital loss method, you can wait till 2024. It's not going to impact your 2023 tax return. So if you already 100% know you're doing that, and let's say you did not have very much crypto activity in 2023, or you're just comfortable calculating your 2023 gains and losses on your own, then yeah, you can go ahead and file your 2023 return now. You don't have to file an extension, and then you can get on my list and we can work on your capital loss calculation in the summer. Technically, we could even do it next year as well, but a lot of people like to know it now just so that it's like, okay, so from Celsius, you have a $50,000 capital loss in 2024. So that means right now we're in like an up market. And so that means your next $50,000 of tax are going to be completely tax-free. So then you kind of know going into your trading this year, oh yeah, I can like sell this at a gain. I can sell this at a gain. I'm not going to pay any tax. So I can just help you know like kind of what your cushion is as far as taxes go and when you might need to start making estimated tax payments. But also I will say one like word of caution, even if you feel like you can calculate your 2023 taxes on your own and you want to file them now and then get on our list later, as I kind of mentioned earlier, but I'll just reemphasize now, we have to make sure that we're using cost basis prior to July 2022 when Celsius shut down. So we can't like write off Bitcoin that you bought last week at $70,000. Like it has to be Bitcoin that you've bought before July 2022. So any like cost basis prior to then. So just keep in mind that if you're doing 2023 and like you're going to do FIFO, for example, on your calculations, make sure the amount of cost basis that you have left in, let's say it's Bitcoin or whatever you had on Celsius, you have enough cost basis that was purchased prior to July 2022. If not, we will have to amend 23, potentially even 22. Most people, we haven't had to amend 22 and it's worked out okay. But especially if you're doing Ponzi, like we have to make sure that we're only taking cost basis prior to July. So just keep all that in mind. I do not know why I just made a thumbs up. Like, I don't know where that came from, but okay, thumbs up. And yeah, so in short, yes, you can wait till 2024, but just there's a few other moving factors. So maybe even schedule a consultation with us or just double check your cost basis before you do that. I'm sure there are some questions we didn't get to. Again, if we didn't get to your question, you can like email me or set up a consultation. Some of them were just like so niche or had like all of your personal information on them. So I didn't want to read them out here. But these ones were the majority of the questions. So hopefully that helped a lot of people that were having some hazy things from my last video.
Yeah, no, I think we covered a lot. I mean, I've gotten a lot of questions as well, tons, and just the comments on my YouTube videos. So no, I feel like we really covered a lot of the things that a lot of people had as questions.
Feel free to like reach out to me on Twitter or my email. If you have any questions, I'd be happy to help.
Awesome. So I'll include all your info below in the video description, and that's basically it. So thanks for coming on.
Yeah, no problem. Maybe we'll do a part 3 in the future. But for now, I think we're super busy with what we have. So we're excited to work with everyone who comes our way and get you navigated through this Celsius situation, put a little bit of a silver lining on a bad situation.
Totally. Thanks again, Laura.
Yeah, thanks. Bye.